Today is what we want to talk about is how to start making a profit in 60 days. Now, what I'm referring to here is someone who has not traded at all. But if you have traded, then this 60 days may be a lot less if you catch on to what the concept that I'm trying to share here. So we're going to go right to the charts, and then we'll come back to the PowerPoint and talk about things. Because what we're showing here is the 1 hour chart. And we want to show you some things pertaining to the nth degree course material, and so you can see how that you can learn to use some tools to help you to spot and determine which direction you should be trading. First of all, I want to talk about is impulsive and corrective moves. So you want to only trade in impulsive moves, or you want to mostly trade an impulsive move because those are the high probability trades. An impulsive move is when you see blue here above the zero line. And a corrective move is when you have red and above and it's going the other direction. So this area right here is corrective. Oh, it tried to be impulsive, and it showed a little bit of impulsiveness there, but how can you tell that this is not, even though it turned blue, it's not impulsive? Look at this. This is below the zero line also. So when it is above and this is blue and above, those are your strong impulsive moves. Impulsive move there, and then it took off again there, and it took off again there. So when the male is above, you have a impulsive move, and it's above. And the colors and the hot lines, those are the areas that you have a higher probability of trading when things are all going in your direction. Now, does it have to be only on the 1 hour? No. You could use the same concept on the day, the 4 hour, 1 hour, 30 minute, even the 15-minute as a larger time frame. Depends on how what you're trading, what you're trying to accomplish. The concept is impulsive and corrective moves. That's an example of going long. Here's an example of impulsive moves going short. Red and below going short. This is below also. So this is a big impulsive section right here. Then it went below again right here. But you can see there was off points right there. So right in here was another impulsive move going short. And these are corrective now. See, the blue is the corrective if it's below. That's one main thing that you want to be aware of. The next thing, and I'm just giving you some highlights of what's in the nth degree course material so that you can become profitable. Now, we see right here momentum, and we see up here that the price is still trying to hit a double top up here, but the momentum's falling off. This is not true divergence, but it's an example that the momentum is stopping. It's slowing down. You see the males below. You see a change. You see the momentum is slowing, going to the zero line. So right in here, the market told you potentially you're going to have a correction. Now, is this going to be the change of the direction of a trend? No, not necessarily right here. You might have a little bit up to test this again, or you'll get a trend line coming down, and then when it takes off again, that would be your impulsive move. When it changes, it might go blue, change red again, impulsive going short. So what have we done? We talked about impulsive and corrective. We've talked about momentum changing in the marketplace, the convergence, divergence, and congruence. That's what we've talked about in the nth degree course material. Now I'm going to go back to this other chart, and that's what we've added here is a moving average, a two-color male, and a filter indicator. This is the scanner setup. Now we're going to look at this as the same chart, same everything. You still see the impulse and corrective. Now notice that when this is blue, we start getting 4 bars. We have another indicator here that there was a big 4 bar there. And there was a 4 bar right here. And notice what happens. We had a line right there below the 0 line. Momentum was falling off here and below the 0 line. And it's below the moving average. So that is what the nth degree course material does. And then when you add the scanner to it, now the scanner is going to be bringing you actual trades. So that's what I wanted to share with you about the course material on the charts. You can do simulated trading. That means you can go through and draw these lines, see what would have happened. You can move it off to the side and only see the part as to what it's going to be doing. Look at your Jumpstart course material to learn how to do simulated trading. But that's how you practice. That's a back testing way of learning how to trade. And attend as many of the PIP clubs as you can. Now, many of you were here during the PIP club, and if they fit your schedule, great. That's going to help also. Ask questions. People were asking questions today. That's going to help everyone. And share with others. So you talk with people and say, I'm taking this trade or I see this setup. Now, the nth degree has everything you will need to become a successful trader. And the Norwood Strategy Scanner can turn your trading around. Now, there's been a big problem in my trading and everyone's trading is to finding trades. The problem of finding trades is taken care of now with the scanner. You can now concentrate on managing your trades. So where do you get started? Well, get started by getting the nth degree course materials. So you're trading along with what we're doing instead of just saying, oh, I see it happening, but I don't know what they're doing. And then subscribe to the Norwood Strategy Scanner. Now, you can learn a trading strategy. Say that you like the 4-hour, or say you like the 30-minute, or say you really want to trade short term, you can use the 15, 5, and 1 minute time frames. But learn a strategy and do the same thing on every trade. Trade the same thing over and over. You've heard people talk about setups that they use and trade with. And they're looking, that's their ideal trade, the setup that they're wanting to have happen. Then, when you are making 10 pips a day, increase your goal by 5 pips a day until you reach at least 30 pips a day. Okay, start as a goal to reach 10 pips. And once you've done that, then go a little bit, a few days, then raise that to 15 pips a day. Once you've done that consistently, raise it to 20, get up to 30. That would be a target that I think is realistic for everyone to do. Now, from 30 pips per day, you'll naturally be able to increase your average pip per day. But let's talk about the 30 pips. We have people that have done this 30 pip strategy where they got up there and did that for a while. Now they share with us that their goals are 50 and 70 pips a day because they're using the same thing. They know how to get 30, and it's happening that they get many more per day. So now we're going to trade with a 10 cents lot per $100 in your account. That would be a 1 lot trade per every $1,000 in your account. For example, if you had a $1,200 account, your lot size would be 1.2. If you had a $5,700 account, your lot size would be 1.7. If you had a $10,350 account, I just round it up. If you're a little bit higher, a little bit lower, it's okay. The main thing is be close to this. That's 1 standard lot and 40 cents. So that's how you would calculate your lot size for the example that I'm going to share with you. So when you're trading with this 0.01 lot per 100 on your account, and here's the lot size that we talked about. Now that's 30 pips a day times the 1.2 lots equals $36 a day. That's not going to make a living doing that, but what you're doing is developing skills, and this is a small account. Okay, that is $180 per week, or that's $720 a month, or that is a 60% return on your account. Little pieces make a growth in your account. Now your account now, instead of being $1,200, is pushing $2,000 in your account. And you can do the math to see how that figures out. So 60% increase in your account, that just may overwhelm you. Maybe you don't have the confidence to trade with that lot size, but you are making the 10 pips a day. Gradually increase your lot size to where you have the confidence, and this 10 pips a day will give you the skills. So let's just do 10 pips a day. That's $12 a day, $60 a week, $240 a month, or that's a 20% return on your account. That may not be overwhelming to you. That is very doable. 10 pips a day gives you a 20% return on your account if you trade these larger lot sizes. So when we say you can start making profit in 60 days, we are working on 10 pips a day, but that is profit. 10 pips a day is profit. You can get better and increase and become a really successful full-time trader. But be consistent. Then you can grow from there. Just be disciplined and consistent. Now, I know that we're all tempted. There are times the market really starts moving. We break the pattern that we're used to trading. We say, oh, that's going to go, and we just jump into it, and it may or may not go, and we either find out that we had a lucky win or we had an unlucky loss. It was a time that you need to settle down, because either of those trades are not consistent, they're not disciplined, they're wild gamble trading. So get started by getting the Nth Degree course and subscribe to the Norwood Strategy Scanner. Now, what else are you going to have along with this? Well, you can attend the PIP Club. And if you were there today, you noticed that there was a lot of education. There were a few trades taken. The market was really flat, but we were able to take out a few pips. And we have 21 trading labs along with the course material. This is probably 20-minute to 40-minute webinars discussing different questions that people have asked us about the course material. Some accelerated coaching webinars we have, a couple of those. You get the Fibonacci course, and if you paid for this individually, that's $1,200, almost $1,300. Because of the webinar, the link I'm going to share with you, the price is $697. That's a place to get started, and you need the education. Here's the link. I'll leave this here for just a moment while you write this down. I will have this up on the and be emailed out to people, so you will get a copy of this video if you don't get the link down now. If you have the course material, then subscribe to the scanner. Get involved and learn how to take trades. Invest a little bit in your education, and if you do that, you'll find that you'll start making progress in your goal. You can invest in the scanner and say it doesn't work. Well, discipline yourself to follow the rules. It's because people get wild. They take all the trades. They don't learn what a good one is. Give yourself a chance to learn it and attend and associate with other people. Be in the scanner forum where you're talking to the traders. And if you're not able to be there all the time, go back and read what they're talking about, and then look at the charts and study that way as well. If you have any questions, contact us. You can call us, or the email is the best way to get back with us. And let's talk and answer your questions, and come to the PIP Club and get involved. Close for now, and we'll talk to you another time.